let's address some of the biggest accounting myths online. Number one, I don't make a profit, therefore I don't owe any tax. Be careful with this one. Okay, so you don't pay tax if you didn't make any profit on corporation tax, but you still may owe tax in other forms. And that could be national insurance, it could be PAYE, it could be VAT. So just be careful with that one. Number two, my accountant automatically submits everything on time. Again, be careful. You as the business owner are responsible for your company filings. And we see many cases where they think their accountant has filed everything and they filed it on time, and that's not the case. And unfortunately, then the business owner is then responsible for any fines or penalties or late interest charges if those submissions are not made on time. Number three, if I use accounting software, I don't need to keep receipts. So just because you're using accounting software doesn't mean that those receipts are automatically captured. You still need to keep those receipts. So they can be kept digitally, so they can be kept on the software. You take a photo, potentially, or scan them in, and you attach them in your accounting software, but you still need to keep some form of receipt, whether that be the paper or whether that be a digital record. Number four, profit means I've got money in the bank. Not always. People get confused with profit and cash flow, okay? And the two are not the same. The two can be very, very different because you might be selling things and you might be expecting the cash to come in, but frankly, people haven't paid you on time, and therefore your cash is less than your profit. And the opposite might be true. You might be paying suppliers in advance, the money is going out of the organisation sooner than the profits are coming in. So profit doesn't always equal cash, and often doesn't equal cash. Number five, taking money out of my company whenever I want to is fine. Again, a real red flag. Just be careful when you take money out. It needs to be properly recorded. So it might come out as a dividend, it might come out as salary, it might be an expense reimbursement, but it has to be properly recorded and it has to be put in the right bracket. And if you take out too much money from your business, that can be hugely problematic. So just keep that tight and make sure it's properly recorded. Number six, switching accountants is complicated and risky. Not necessarily. Actually, changing accountants is quite a common process that a lot of companies go through. And there's actually a well-trodden path for changing accountants. You go through a process called professional clearance, which is whereby the incoming accountant or the new accountant will write to the old accountant and ask for your records to be handed over. And then your records are handed over, a new accountant will set you up on the system, and then effectively you're up and running. You will have to provide your permission to your existing accountant for them to release the records, but once that's done, records can be handed over, and then frankly you'll be up and running with the new accountant. And that handover process normally happens pretty smoothly. Number seven, my business isn't big enough to need a budget or a forecast. Well, we always say to our clients, regardless of your size, make sure you've got a budget and a forecast in place. It just provides complete clarity on where you're heading and where you want to take the business. And it also teases out issues as well around resourcing, if you're looking at staffing and recruitment, how much you need to deliver your business. And it also gives you an opportunity to sort of stress test your business. So look at scenarios. What happens if this happens? What happens if that happens? If my revenue's not as good as I thought it was going to be? If it was better than I thought it was going to be? It just gives you those levers to look at within your business if you do need to flex anything or change anything. Number 8, once I've set up my limited company, I don't need to worry about doing anything until the year end. No, be careful with this one. There are going to be obligations that you're going to need to fulfill during the year. If you're running a payroll, then that is done under what we call real-time reporting, RTI. So that needs to be reported every time you make a payment to an employee. So if you're running a payroll monthly, that needs to happen monthly. There's other commitments throughout the year, things like a confirmation statement. So this is the annual declaration you need to make to Companies House to tell them about whether your business is still trading, and things like directors and shareholders. That needs to happen throughout the course of the year. So just make sure that you're on top of those things throughout the year. And also, it's just good practice to stay on top of your numbers as well throughout the year. Understand where you are, in terms of your actuals, and if you've got a budget in place, how you're performing against that budget as well. So that's just good practice. But there are certain compliance things, like payroll, also VAT as well. Often that's done quarterly, so that would need to be factored in as well. So it's not just I can set up a limited company and forget about it, forget about the finance and the compliance until the year end. Number 9, corporation tax is automatically deducted by HMRC. Unfortunately, it's not the case. At the moment, there's no automated way to pay your corporation tax. You've got to physically go in and pay that. Some firms do set it up on standing orders, so it comes out regularly, but it's not an automatic process. So for PAYE, you can set up a direct debit, and that will be taken out automatically by HMRC. But corporation tax, you do need to make that payment, whether that be standing order or a bank transfer, but it's not automatic currently. Number 10, I don't need to register for VAT until I hit the £90,000 turnover threshold. Be very careful with this one. The first common mistake is the £90,000 is assessed on a rolling basis. So it's not based on your financial year, your business year or tax year. It's done on a rolling basis. And this often catches people out. So just be really careful with the VAT registration rules. And if you get it wrong and you go over that, then you've got a problem, because potentially then you're going to have to backdate your registration and pay VAT from the point that your 90,000 was exceeded. So that's 10 points which are very common myths that we see played out online. If any of this has been useful, please like and subscribe to our channel.